Hello and welcome to FinTech Future's latest executive interview. I'm Ruby Hinchliffe, reporter at FinTech Futures, and here with me today I have Jaya Vaidyanathan, CEO of BCT Digital, the FinTech arm of digital transformation provider Bar1 Cybertech. If you're not familiar with BCT Digital, the firm's risk management product suite, RT360, recently won the Rising Star Award presented by Chartis Research, a leading provider of research and analysis on the global market for risk technology. BCT Digital's client spans as many as 20 countries. The fintech's products use emerging technologies such as big data, AI patterns, and creative analytics to revamp firms' digital experiences. And now, with the human aspect of banking rapidly declining, these emerging markets, or technologies rather, are becoming ever more important. So let's dig into them further. Let's start off, Jaya, with loan fraud. Plenty of it is happening across the world, particularly during and post-pandemic, as demands for loans reach new highs. How has big data changed the way your approach to loan fraud at Bar1 Cybertech works?
Loan frauds happen because of a lot of reasons. Let's look at the worldwide scenario in case of where defaults occur. Defaults occur, A, because of the inability to pay, which is largely prevalent. And then you have the willingness to pay, which is what you classify as loan frauds. And willingness to pay, though there are less number of such cases, they have a far-reaching impact because they can wipe out balance sheets of large banks. So when you look at the loan fraud, the way we use big data is quite different. What is traditionally being used in banks worldwide is traditional data sources such as your loan origination system, or you would use core banking systems. Whereas where big data goes in, it gives you real-time data alerts. It looks at, let's say you're looking at a diversion of funds. It would look at it not post-mortem, but as soon as the beneficiary is set up, it would go into the realm of big data and check, is the beneficiary a blacklisted company? Have the directors been dumping shares in the market? Are they in the news for the wrong reasons? Have they been subjected to frequent management or tax audits? So you have a whole range of data that you work with that can prevent a fraud from happening rather than looking at it post-mortem. And then in the realm of inability to pay, you would look at leading industry indicators, just such as commodity information, which is used as a lead indicator rather than a lag indicator.
Got it. And so I'm interested. So how do you take what might have once just been considered an instinct about potential loan customer or loan risk and turn that into a calculated science? That seems to be quite a complex process. It'd be interesting to get some more insight on it.
So the whole realm of artificial intelligence is not just about doing what a human being does, but it is also what a human mind cannot comprehend. So let me explain that with some data points. Let's say that you are given 3,000 data points. What would you do? You would just get confused, right? And say, how is this relevant? You would try to draw patterns. Or most often you would say, I think something is happening. That's what we call instinct. So how do you convert that very difficult process of instinct into a calculated science is where AI and predictive analytics come into play. So what we do, we say based on my past experience, I think this is something that's a red flag. So the past experience becomes predictive analytics. It takes the past data and models it. And artificial intelligence is something that makes patterns out of bad past data and tells you and helps you forecast the future. So this is what we call instinct. It's actually a calculated science. When I talk to you about credit decisioning, we take as much as 3,000 data points and then we kind of map it into what happened earlier. When this pattern appeared earlier, it was a fraud. When this kind of a red flag appeared earlier, it was a fraud. And not only do we take AI and predictive analytics, we also add a predictive science to it, which human beings can't do. They say, I think something is going to happen. It's my instinct picking up, right? But here, what we add is also a scoring engine. It says not only it's an alert or something is going to happen, but I can tell you with 86.4% probability that something is actually going to happen and this is the way it's going to happen. So that's where you convert an instinct into a science.
That's really interesting because I've never heard that before, and it is really interesting to hear it explained. What about the global relevance of better credit decisioning tools? Does this depend on countries' compliance requirements, for example?
We operate in 20 countries and we are a leading risk management provider in about 20 countries. So you look at it, there is a compliance requirement in different countries. They're defined in different words, but they essentially mean the same. In US, you call it OCC guidelines. In Australia, you call it APRA. In Europe, you call it something else. But it's all essentially coming down to governance and principles around compliance. So in Europe, each country has a different norm, but most of them have standard guidelines, and so do you in UK. So most of what they've done is they've prescribed a set of guidelines and said, here is how you look at credit decisioning. Here is how you look at, credit risks. And there is a pattern in which it's married to a compliance requirement, because as long as it's a guideline, then banks may or may not have to comply. But as long as it becomes a governing principle, then all of us have to comply, which is where all countries are coming in. And the pandemic has just accelerated that timeline because, as you know, credit risks and credit crisis is on the rise universally.
Sure. And there's so much data around these days, which often makes me feel like we need to be more specific about what kind of data we're talking about. So what sorts of data are you using at Bar One Cybertech?
So for this particular solution that we were talking so much about, there are different kinds of data we use for different solutions. And we work across a spectrum from the user side of data to core front office and back office and mid office. Often you see that digital experience is all about what the customer feels, which is what we call front office. But bulk of the issues lie in the mid office and the back office. So that's where we need to strengthen the system so that you can have a great front end. It's not going to work unless the back end kind of becomes relevant. So the types of data that we use are structured data, which is kind of what you're normally used to. It's unstructured data. It's text data that resides in banks in different pockets and is never seen or used post collection. So it could be OCR relevant textual data, which is contextual, right? I'll explain with an example. When you look at an annual report and it says no adverse comments, that's usually when you use the text mining tool, it takes that as one hit because it's no adverse comments. How do you kind of say it's actually an adverse comment? It's a slightly different way that you look at the data. And then, of course, the realm of big data, which is more what exists in the web. It is in the form of news. It's in the form of it's in the form of analysis, because you would see that a director actually dumped shares, or there were frequent resignation of the board, or you could kind of see that they had a lot of churn in the management layer. These are reported in the news, and it's just a news item in isolation, but it becomes an input into the credit decisioning tool when you look at it as red flags. So different types of data are used, and you kind of make a pattern out of it, and then you have a trigger of libraries that says when this happens, this is what it means or could mean. And then you could either have a human layer look at it, or you could have your AI kick in. The way that we design the system is usually that it's straight through, and then a person could look at it, because it's good to have the set of eyes that also has a secondary check on the data, but that's not really required.
Sure. No, you explained that really well. So thank you, Jaya. That is all from us here today at FinTech Futures. Feel free to check out more of our content via our YouTube channel or via Twitter and LinkedIn. And a massive thank you to you, Jaya, at BCT Digital for some fantastic insights. Catch you next time.
Thank you very much. It was a pleasure talking to you.